Hi, I'm Sam Meredith, and today I'm joined by Waqas Adenwala, an economist from Forecast, to discuss the latest financial data from Australia. Now, the central bank kept its cash rate steady at a record low of 2% today, which had been somewhat expected. Though with the currency under significant downward pressure, is there reason to believe further cuts are in the pipeline?
Well, lately, in a very recent speech, Governor Stevens did say that rate cuts are on the table, so we can not completely rule out the situation that they won't cut any further. In fact, market pricing, as per data we have on Bloomberg, does say that there is a 20% chance of cuts next year too, so we cannot completely rule out the situation. Also, having said that, even though we've had significant downward pressure on the currencies, that hasn't really helped the external sector if you think about it. Trade balance has been printing a deficit for the past 15 months, and very recently printed record lows. So that's not a very good sign for the external sector. And then again, we are hearing all the bad news about China's mining sector that has not been helpful for Australia's resource exports. Of course, the low prices of commodities don't help either. So we cannot completely rule out the chance of another rate cut. But the latest statement by RBA was fairly neutral. In fact, given the past statements were slightly dovish, I think it is a slight change in the stance. So I'd rather wait for Q2 GDP now, which is going to be due in the first week of September, to be able to comment further. But I think it's not going to come anytime soon with another rate cut, but we can definitely not completely rule out the situation either.
Australian retail sales for June jumped 0.7%, beating expectations of 0.5% growth. In fact, with most of the sectors posting in the positive territory today, how much of an impact is this likely to have on market sentiment?
In fact, if you look at the breakdown, actually, this retail sales indicator has 6 subcomponents, and only half of them went positive. The other half were either neutral or declined. Food was one of those indicators that actually fell, and it's the biggest component of retail sales itself, makes up roughly about 1/3 of the whole retail trade data for Australia. So yes, it's a big up for Australian traders who are looking at a good number for retail sales. This number in general feeds into the private consumption data, so that is good for Australia's private consumption data as well for Q2. But lately, market sentiments have not been very optimistic. The Westpac indicator for consumer confidence has actually declined for the past 2 consecutive months. And one of the indicators that you could look at for having market sentiment is labor data too. So yes, it's a move in the positive direction, but it's going to take a bit more for positive sentiment to be completely solidified and be consistently up there.
Lastly for today, which indicators can we look out for that are likely to have a significant effect on the Australian economy in the short term?
Of course, no one would rule out GDP itself, but in that sense, labor market is actually a good indicator because it serves as a lead for how many people are actually going to be employed. Sector-based data is not very easily available for labor on a monthly basis, but regardless of that, we do have a lot of high-frequency data that does help. So retail trade is definitely one of them to see how well is the domestic consumption economy doing. In that regard, I will also continue to monitor trade data because external sector is actually quite important, and we have been seeing lots of major declines in commodity prices. So trade and retail sales would be the more short-term indicators that I'd be following more for the Australian economy.
Thank you, Waqas. Be sure to check back with Jugoscopy for more updates throughout the week. Goodbye for now.